European markets were rattled by political upheaval and a surprise contraction in German manufacturing. The Dutch government has collapsed, leading to fears that the European Union may also unravel. That sent stock markets tumbling and anxious investors ducking for cover. Neil Woolridge reports.
In the past, Holland has been a paragon of fiscal virtue, but now even the Dutch are being shaken by Europe's rolling economic and political crisis.
The European Commission trusts that the Dutch government will continue to seek budgetary solutions that are important for the country.
But Holland will have to do so with new leaders. Overnight, the Dutch government collapsed in a feud over proposed budget cuts. That was part of a triple whammy for European investors. The French market was spooked by the rise of the Socialist Party in its national election, while new figures showed Germany's manufacturing sector shrank at the fastest rate in 3 years.
Clearly, a lot of the fiscal restraint that's being introduced and forced upon Europe is really only starting to hit the ground now, and will probably hit with increasing force over the next 1 to 2 years.
And even in those more prosperous European countries, they cannot get agreement on what's the best path forward. Do we save our way out of this, or do we grow our way out of this? And the political divide and the cultural divide is really beginning to put some cracks into the structure.
Investors wiped $150 billion off the value of Europe's biggest companies, and all of the key markets suffered heavy losses. Fears are growing that Germany's plan to solve the continent's debt crisis may unravel as Angela Merkel's allies in France and Holland lose support. David Bryant from Australian Unity says Europe has reached a tipping point, which could lead to a breakup of the EU.
It's causing investors to stay out of markets, banks not lending to each other, and a lot of uncertainty. And the major impediment to getting a good growth program underway in Europe is actually that fear and that uncertainty.
While political upheaval has taken centre stage this week, the threat of a sovereign default remains. Evans & Partners Chief Investment Officer Mike Hawkins says investors are now questioning who will support Europe's banks.
It's the implications of sovereign debt on the banking systems. And probably the biggest risk still out there is Spain from that respect, because not only have they got a sovereign debt problem, they've got a house price problem as well.
Australia is by no means immune from Europe's troubles. While the latest drama had little immediate impact, it's still weighing on the long-term outlook for both the economy and the stock market. And that's sending many investors offshore looking for more attractive options.
If you look back through the last 3 or 4 years, the good businesses, the ones that are generating cash, growing their profits, their share prices are still going up. And we can certainly see plenty of opportunity, more so overseas than we can domestically.
It's a matter of velocity. You need money to move around for economies to work and grow. People need to build, buy, manufacture and sell. And Australia is suffering from the same slowdown that we're seeing in Europe and the US.
All the more reason for investors to hope for a supersized rate cut from the Reserve Bank next week.